Thank you for the opportunity to present today. Please note our disclaimer on page 2 of the slide pack. Now, 10 minutes is not a long time, so let me use the allocated slot to emphasize some key points that make Pan-African an attractive investment. On slide number 4, some corporate information. We are listed in Johannesburg on the JSE and then in London on the AIM market. We are also finalizing an ADR program in the United States. Our ADRs should actually commence trading later this week. Some of the other South African gold producers have benefited greatly from similar programs. Investors seeking leverage to the gold price will now have the ability to trade our stock via 3 different platforms. Our group market capitalization has increased to approximately $500 million, which also appeals to larger investors. In summary, on slide number 4, investing in Pan-African provides scale and liquidity. Slide 5 details the geographical map of our operations. All of our mines are situated in the Mpumalanga province of South Africa. A couple of words on South Africa. Like most other African jurisdictions, we face a number of challenges. There are, however, a number of benefits also to operating in our country. These include access to technical skills and support, well-developed infrastructure, as well as availability of power and water. Also, an important point, more than 90% of our costs are denominated in South African rand. So the US gold price has been performing well, but the gold price in rand terms has done even better. We actually breached an all-time high a couple of months ago. So investing in Pan-African resources, you have the benefit of rand leverage to an increasing US dollar gold price, and also the benefit of almost 150 years of mining legacy and experience in South Africa. Slide 6 is an overview of our key producing assets. Barberton Mines comprises 3 underground mines. A long life, we still have 20 years of life on the Barberton underground, excellent safety record, and a fantastic head grade. We maintain a head grade from the Barberton underground of 10 grams per ton. Then we have the BTRP, which is also at Barberton. This was our first foray into gold tailings retreatment. The plant literally turns old rehabilitation liabilities into gold. The capital cost when we commissioned the BTRP was some $30 million. It paid itself back in 18 months. Next in line is Elekulu, which means the big one in Zulu. Elekulu was constructed in 2018 on budget and within and on schedule also. It was a $120 million plant. We process some 1.2 million tons of tailings per month. All-in sustaining cost is between $600 to $700 an ounce, very attractive. Also, long life, 12 years remaining. And then the Evander 8-shaft pillar, we're just ramping up that operation. It has a life of 3 years. It should be producing some 30,000 ounces of year ago, 30 ounces of gold per annum at an all-in sustaining cost of sub $1,000. So a very good cash generator. On slide number 7, when investing in Pan-African resources, you are investing in a pretty unique combination of gold production from long life underground assets and then also long life and very low cost surface operations. Going forward, approximately 50% of all of our gold will be from surface activities. On slide number 8, when you invest in Pan-African, you are investing in a safe gold producer. The trend in terms of our safety statistics clearly demonstrates good progress. This progress is a result of a number of safety initiatives and also due to the fact that 50% of our production now is from surface assets. 2 weeks ago, I'm very happy to report that our Barberton Mines operation achieved 3 million fatality-free shifts. This really is a first in the history of Barberton Mines. On slide number 9, the cost profile of our operations, the lower cost assets, which comprises the bulk of our portfolio, are producing at an all-in sustaining cost of sub $900 per ounce. And in terms of the higher cost operations, we have implemented a number of measures and initiatives to bring down those costs. Greater detail on these initiatives can be found in our corporate presentations. In summary on the slide, when investing in Pan-African, you are investing in a producer with attractive margins, further scope to increase these margins, and increasing gold production in years ahead. On slide 10, 11, and 12 actually provides balance sheet and financial information. On slide number 10, at the prevailing gold price, we expect to de-gear our balance sheet completely in the next 12 months. Slide 11, we would like to get back to being a sector-leading dividend payer in the gold space. In years past, we averaged a 4 to 6% dividend yield. We resumed dividends last year. There's no reason why we can't increase dividends in the year ahead, and then certainly again increase dividends in FY 2021. On slide 12, we had a pretty aggressive hedging policy or profile, and that really was to redeem all of our debt. The important thing is that from December of this year, so December 20, we will be completely unhedged. So investing in Pan-African means a strong statement of financial position, attractive dividends, and exposure to the gold price unhedged going forward. Slides 13 and 14 details some of our ESG and COVID-19 initiatives. Our operations make a material positive difference in the area in which we operate. We provide employment and economic opportunity to thousands of people. We build and maintain schools, clinics, and other community infrastructure. Our tailings retreatment plants also cleans up historic liabilities and frees up land for development and agriculture. In terms of our response to COVID, our operations are compliant with all of the required protocols and procedures. Slide 15, Egoli. This is our near-term growth project. It's an internal project which is part of the Evander portfolio. We estimate that for some $70 million of peak funding, one can produce 80,000 ounces a year of low-cost gold for a long time. And we're very happy to announce that as part of our final results presentation in September, we will detail the final plans for Egoli and how we plan to develop this project. Then to conclude on slide 16, where to next, financial year 20 and beyond. We will continue to produce safely and sustainably into our financial year 2020 group production guidance. You can expect increased gold production in the year ahead in FY 2021. We have a number of initiatives in place to further reduce our all-in sustaining cost of production. In the year ahead, we would plan to produce it below $1,000 all-in sustaining. Certainly, you will see a deleverage of our balance sheet, a de-gearing in the year ahead, and increased dividends. And then we will continue our focus on organic growth and asset optimization. Thank you very much for your time.